Hello and welcome, as it is the completion of the 8th day of January 29, 2020. I thought I wasn't going to make that mistake. It's going to be so easy moving to the 20s. I'm not going to say that old year in the early January days. Oh, I just did. All bets, trades of the like within each his own risk and their own reward. I'm just going to be real here and a lot, so normally when I do these videos, I try not to, and sometimes whatever, not use some of those four-letter words that some people deem to be profanity when, what the fuck? I mean, it's just speech, so whatever. Silver, gold, cryptos, because a lot of stuff is going on. I'm not going to say this shit's hitting the fan, but the volatility is most certainly rising up, and it was only luck that in today's session, the price action piercing extra got above this 1876 handle. I put it a long time ago. It's a short-term level, but the intraday movement did see the price have a high in silver at $18.85 and a low of $18.05. A differential of 80 cents. That's near 5%, 4 point something. And even continuation here down furthermore 1.2. So if we take it from this high to 1885 to the low of 1786 now, that's $1. And that's a little over 5%, closer to 6. As with obviously no support coming in at 18 and 2/9. Now dipping in very much around the 18 average of close. So it's having this more deeper correctionary phase. Again, these holding areas very, very important in here. The most deepest area down in here. Let's take a look at this on a shorter term time frame. And here we have it. There's just this fast move. Didn't take much time there. And supporting this level of Fibonacci here for the 8 o'clock hour session earlier today. And then not able to really sustain any rallies from this point. Unable to support it here. And just recently here at midnight, price action going down below these lows. So will we have a continuation correctionary phase? We'll see. But now let's talk about this quickly long term. And from this high, it's within the weekly chart. Well, it's been in this range. So up to this upper part, it hasn't escaped this sideways movement. It's just merely gotten to the top part, and it's still in the upper end, and it's at the top part of this big area, meaning it can still successfully have the chance to support this area where it came from. But it doesn't have to do that to hold. Again, the long-term stuff, holding these key areas is big. If it makes a lower low to this and a higher low to these ones in here, then you're just going to talk about this as like lower highs and lower lows within the opposite trend from point low to point high to what new point low would be. That's just one example of such. It can still have that reattempt to get above, but ultimately it always has to get above this high. It never even attempted to even get to that. All it did was get to this high that it would go to, and that's exactly where it went to. And of course it's pulled back. We still got the 18 average of lows, all these things that can successfully come in, because first I'm talking about holding higher lows from this key point, and that's important. But for now, we got this low that would be on the level if there's going to be any correctionary moves. If it comes down, and the 18 lows in here would be a higher low. If you see any lows in here starts to revert higher, that's just another good setup that would be coming into play. And again, getting above these highs, we can now start to be talking about testing the levels near the 21 handle. And we'll finish it off within the month. I'm not going to put the quarterly in. I like to put the quarterly in because then I can see the entire situational move from this previous high in here, the rally that came up from the start of the 70s that completed the entire decade. And then we can now just take a look at this. So we got that long-term stuff covered, and just an amazing consolidation that's been going on, and that's still in play. It's still rising above this level. Until it's in this, you can talk all you want about this ascending triangle, any of these sideways, whatever it might happen to be, and it hasn't even tested the 18 lows, but that's what it needs to fail upon to say that this is a failed move. So there's a lot of downward action that has to take place before I can even start talking about, okay, the possibility of this being a failed move, because it's not even close. It's still in the bullish situation. If I'm talking about anything, is if it can get above this, then the potential for spectacular gains is most certainly in play. Now let's take a quick look at gold at 1556 right now, quarterly term time frame, and long-term consolidation. Now it's had small moves, but all these were small and decent sized moves. I mean, you had these like 3 periods here, these ones in here, and then the wake up moment for me and a lot of people in 2008. Basically a holy shit scenario on how the fiat currency is presented, and it's, to me, it's not, I don't know what other way of saying not right, because I could probably, if I had enough time, enough pieces of papers, and enough pens and pencils, I could write down 1,000 paragraphs on why that's the case. But as it goes, it was still looking at the stage of what's the story. The story here was leaving the 18, establishing a bull trend, and it was playing that bull trend out for many years. Now it's reestablishing that trend, and it's been playing it out for, well, we're on like number 3. Monthly chart continues to hold in there, getting above this level, nicely above the 18 highs, and it still looks like it's attempting to break this like 4 or so period of sideways consolidation. Let's insert those Fibonacci lines that I put in a little while ago, actually a long while ago, and then maybe we'll switch it over from the monthly into the weekly chart. And this is, I really want to clarify this big time, because I think people call this a bearish candle with the opposite being bullish. And maybe to a degree it's not finished doing what it's doing, and that's what I kind of see here, meaning this declining from this high. Well, we've picked to this, we've came back to this level, only the upper end. If I see this, I think this immediate move, without even looking at the short term, that it's probably going to come down to this line and even pierce below into the 18. But I don't look at, in a bullish scenario, if this type of period comes back, this is just one of those come back to where you came from deals. You have an up move here, and then it retraces back. This is just one that has happened in a volatile session today. We've seen it with silver, so obviously gold should be following suit. We look at this on the daily chart. There we can see there's its nice gain, getting over that 1600 handle. Now it's lost 46 plus like 11, so that's like 57 or so. That's like 3-4%, not like silver because it's more volatile. But we can see if it's going to come down here. It most certainly looks like it should come down, maybe meet up with this 18, come back towards this more common area with this Fibonacci line near 1522. On the hourly term time frame, there we can see this breakout, failing to correct any of these areas where it came from, which would have been between 1579 to like 1569. And since this move hasn't went up, I mean, it's been holding the support, and we got this clear resistance short term. But all these short-term moves to me mean shit. It's nothing. It's like whatever. Like when we know the situation of this, it's just a matter of time before things get crazy. And of course, with the world situations going on with Iran and North America and many parts of the world, I like to say it's not going to be pretty on so many fronts, but it is what it is, and I don't want to hold any particular asset class that I think is not going to be, that's something that's not good to hold based on its loss of value, and I want to hold that does the opposite and gaining in value. So you know what, I prefer that of holding stuff like gold and silver. The ratio for the metals, it's in a just tight, still in this tight little band. It's in at 86 and change, 87. Like 6 of these little periods in here within the, just firmly staying within this 18 after it was supporting it from the 2017 mid-year breakout, and with the exception of the small little run for a couple of months in here, it stayed to that point up until the end of the summer, or start into the summer, and now of course it has been close to half a year just in this correctionary move. Within today's action on the daily term, it's because silver went down more, we had this little upward plane here, but we had from that top point, key high, now 1 low, 2 low, still hasn't gotten above this high. It has gotten above some of these, but it's really just in the sideways, becoming a little choppy consolidation, and it will stay that way until it can start to have a clear breakout, really getting in above 93 or getting to and below 79 and low change, or 79 even. Now let's switch over to cryptocurrencies, that of Bitcoin, and then we'll move into a few alternate coins there after that. Not as much data on the monthly or the quarterly chart because there isn't as much Bitcoin price history. It's in its now second decade. Let's see how it works. Survived the first one, and it started early in it too, which makes it somewhat of an accomplishment that it did, especially compared to where it started, its first early stages. From this high, well, now we have one, we can even start in here. We have 2 periods at which it consolidated at the upper end of the 18 highs. Then it dipped below it, so 2 and some on the dip below. And then 1 more to regain, that's 5 in total. And now we're on 3, correcting from that one before. We're 8 total. So 8 times 3, 24. Been about a couple of years within this consolidation mode. And in doing so, getting above that of here, that's why I say for so long, this thing has the potential. But look at what it takes to change it from it has the potential for that to it's lost the situation. For it has to get above here to start to talk about like a break of previous resistance to say, yeah, the potential is real. For if it comes up here, you can very easily do something like this and top out. Those are always situations that can come into place. But on the downside, I need failure on the 18 average of lows, which is currently, I see, from 43 number. So if this thing like crashes hard or any shit like that, well, who gives a fuck? At least, if it's failure, it's going to happen, but it's part of how this action goes. And when you talk about, can you handle the volatility? Just know what happens. This is part of how the game works. This is how the markets move. And on many successful situations, you're going to have those wild spots. And, you have a spot going like 1,000 down to 200. How do you do? Question mark. Okay, I want your answer. I'm kidding. I don't want your answer. But there's this here, same thing. You lose a bit. People panic, and yet they're panicking when this isn't an uptrend. Well, let's get away from this. It's got to get to like well over 20,000. People talk, that gets bigger news. The volume goes up. More people get hard to get in. Everyone buys it when it's in major uptrends. So like people are buying like crazy up here. And next chart will be, we'll go monthly. And I can say it's been in this band now. For 1, 2, 3, 4, 5 periods. But really, it's been in it since here, this February 01, or February 2018. Okay, 2 years. We're moving into February 2020 in the next few weeks. Sideways consolidation. Really, you could draw it this way. And then we're doing this. Draw this downtrend like this. Start to curve it up and whatever you want to do. But sideways, however you want to look at it. Size of these candles in here compared to previous ones. Pretty similar to here. We've had some wild moves up here. These uptrends were bigger. Keyword uptrends are bigger. So when this does regain it, and it's got to get above the 18 average of highs, the size of they moves, they probably going to be bigger. Weekly chart. And within this move in here, it obviously had a big low, but when I scale it back like this, it's just a higher low, filling not as much, but a noticeable amount of empty space, or a retracement from this low to the high in which it established. This is how much it gave back. At first it was that it gave back a bit more. Now we're filling empty space from this low to this high, and it's gotten back a lot of it. And so far, filling empty space from this low to this high, it's given back a little bit. Not similar to here to here to this one. Noticeable. Similar as in a little bit and then a little bit more. As far as getting out of it's concerned, it never even attempted to get out of this one until here. And that's a decent job thus correcting it now. Now it's trying to get out of this one. Well, it came up to the 18 average of highs here. Ultimately, that's all it was able to do. Not succeeding at support here, thus having a leg lower, not by much. It resisted this area of previous support, but every time it resisted it, it never failed to support. In fact, it only ever tested it once. It may be twice here. Well, now it's changed the statement, but just a little bit. It's gotten up to the 18 average of highs, so it's similar to this. And that's why it's important to hold this area on any possible corrections it might have. Therefore, let's put a line in here, because when I look at charts like this, and I already know what I'm going to see on the daily term time frame because I know that I've already looked at it. But if I had them, I know this is a key area. I want to see how this is. And sometimes I'll just leave this here and then look at it later. Of course, Fibonacci lines, I always leave a lot and they just seem to work out. Altcoins will become after this, but just in a little bit. Anyway, so you can see I put the line here coinciding with this 18 average. We had that breakout occur on January the 6th, a couple day event, having a move, leaving the 18 average at about the 74.5 price, getting up to 84.5. That's a gain of 1,000, about 12-13%. And I don't know about your gas prices, but I'm seeing like 15% up, 15% down on like almost like daily basis. It seems just so volatile in my area. And I'm thinking, man, I mean, it's almost getting like Bitcoin for that. Anyway, that's just off topic, whatever. 18 average barely rising. So you have a situation when you're in a downtrend, sideways trend, all that stuff, there's down, there's sideways, thus you're attempting to get out of it, doesn't succeed, this attempt in here, doesn't even try to attempt this one, but this was a real attempt, that is. Whether it's successful, well, time will tell. And this area, this point in here is big, it's coming down, it looks like it could very easily come down more. We'll see. And we'll finish it off within the single hour term. And came right back to where it came from. Well, first, this was the first area. Failed that. And if it fails here, quick move to the next one. Okay, well, this area here. Okay, well, that's where it succeeded. But what did it do after the fact descending triangle? And it's still in it. In fact, it's really crunched pretty good as we see this. I'll be curious because I'll be going to bed like 20 minutes, 30 minutes after I upload this video. But maybe we have more down move because filling empty space from here to here. Where some key areas, of course, Fibonacci always work, but you can just tell the big level of what it has to hold, like 74.80, 75. The 74, the mid 7,000s is like the big must-hold area within the single-hour term time frame. And let's now transition to altcoins. We're gonna go short-term to long-term. Start off with Theta, and it's really odd how usually these Fibonacci points, I put them in a long time ago. I mean, whatever, it's just random lines. It's not like they ever work too well. Or they do, or whatever. We'll see. 1278 is this key level, but it's the Satoshi point below. It pierced lower, and it usually pierces extra. Oh, you see these lines like this, volatility obviously per minute. Nothing too good, but each minute you go through, it'll look a little bit better. 4-minute term, and nice trend as far as making higher highs and higher lows. We've seen since earlier today in the middle afternoon, it was 1178 and it went to 1278. So that's a 1,000-point gain, like 7-8%. 15-minute chart. Well, this line that I'm kind of hit it twice, I suppose. That's just it's just luck. It's just luck that these levels work out. I don't just because they happen to work this time doesn't mean you want to go out and use it and expect it's always going to look this way. Although it does look like that's a perfect hit on this level here. Nice little uptrend though, really, for what it's worth. Single hour term time frame after resisting this level, getting above, downward slope. And this is one of those interesting situations when we look at it back at like this point. Because we came back down a series of lower highs, lower lows, and what happened here? 3 o'clock in the morning, January the 8th, which was really yesterday. It came up to this level again like it did here, and it failed to support this at 6 o'clock and 7 o'clock in the morning. And when you look at this, you had the just this little pausing on this, and then, oh yeah, you knew that was going to happen probably. Oh man, this doesn't look good. This is a spot where I don't like support because, yeah, maybe we do a little bit. Maybe we come up and resist up towards the 18 average of highs, but it's just not going to do much. So what do? Okay, yeah, a little bit of pausing it. Nah, not looking good. Oh, wow. Well, if this goes up any further, watch out. But this is that area of resistance I said and get up to. And it could pierce extra and fall through. Oh, really? Adjust to the message of the market. Because it said here is looking to break down. It's holding that move. And look at how we see the strength at the 18 highs. Oh, and it's starting to break out. Well, surprise, surprise, surprise. And that's just one example. and when I state adjusting to the message of the market. Why it's a relatively important thing. We can see this has been really choppy, especially between these two lines in here for quite a while via the 3-hour term time frame. 8 hour, still in the mode of correcting this move from the November 30th or the November end of the November lows. So basically the start of December lows to the December solstice highs. And it's corrected about 60. And it's funny because I normally don't have the lines and I can tell just where it is. And that's exactly what this is, a 61.8% correction. And I said here, oh, it pierced above. Yeah, well, the next time, it kind of pierced below. It's just luck. It's just luck. 11.24 was the low. The Fibonacci was 11.27. Next day, the low was 11.23. Whatever. But this one, again, piercing lower because the high is 12.77 and this is 12.78. It's just how it goes. Daily chart, when I look at it from this perspective, we've had a lot of this just choppy up and down sideways consolidation. It's very important. I talk about this all the time. You break a key out, level out, hold that level of resistance, and that's what it's doing 2 times. So if we start to see again, it falters, yikes, a failed move. But it's one of those like big, holy shit type of moments is going to happen. That's how I look at this as. I really, really do. Because we've already had 2 support tests here. We're having another correctionary phase attempt at the 18 highs. If it fails down below, it starts to go, yeah, that's one mother, I was going to say effort, but you know what, a fucker of a move. And that's the whole point. A lot of times in real times, I would just try to change the verbiage or wordage of it. But because of this granddaddy large move and the situation that it's in, this compared to all of these, if it ultimately falters, it's going to break down below this and we're heading down to 768, 742. That's the way I perceive how things should go follow through. But yeah, those types of moves. The other scenario being on the bullish level, it had one attempt to get above the 18 average of highs on January the 6th. Now we can see if it gets above it, and then more importantly, getting above this level of resistance. And then we got good possibility of filling a lot of this empty space and possibly that much there after the fact. Let's go over to Tezos. Next on to Tezos. And it's trying to have tests within its Fibonacci. It's a 38.2 test right now. This was 23.6% in here. Comes back down and yeah, pierces above. Well, look what happens here. Resist this level. Now it didn't even support this one. Now we're starting to show signs of possible resistance. And if we see continuations within these signs, then the continuation of decline from this move, and maybe it's going to fill a lot of the empty space. But really, the way I look at any key move, 61.8% is all the easiest. Well, not the easiest, but it's mathematically the easiest must-hold number. And that mathematical number is 1,293. 3-hour term time frame. There's been several attempts, some okay, of getting out above this. This one being the first one. This really wasn't much of an attempt. It was just really sidewaysing it for most part there. This was a pretty good attempt. It ultimately failed, and there was failure move there after the fact. This was a decent attempt, and that was within this for continuation of that failed move. And now we have another one. It's still very much in the early stages. All it has done recently is have this consolidation first flattening out the band, and then breaking what resistance it did establish, which coincide with the Fibonacci. But it's just a mathematical number that just happens to sometimes work out here and there. Calculate it and use it as you wish. High divided by low to the exponent of the Fibonacci numbers like 38.2, 61.8, 23.6, 71 minus 23.6, 76.4. It's getting late for me. But must hold area here right in that point there. If it does it successfully, nice. But same thing as theta, holy shit type of a moment should come into play. Because if this thing ends up faltering in here, I'd be expecting a fast move there. But if it's able to continuate this move from a key low to a key high and then start to bring it in, well, we'd have a battle with the 1979, and it's got to get above this and above 221, 22-ish area. Basically above a 61.8% from whatever this low happens to be currently in at 1527 from the high that's in at 2555, we'll call it. And I want to quickly go over a couple more, but I'm running low on time, so I'm just going to finish this off. First, we have Dash, which is trying to establish a trend towards the upside, having this consolidation here and not falling in any moves down below, thus having the opposite or break. But boy, did it ever establish a key level of resistance. That's stage number 2. Stage 1, band flatten out. Stage 2, establish resistance. Stage 3 is live, baby. Correctionary phase. It's back to it. It's pierced above it. It could come down a little bit more and test, but that would coincide with this. So it's just, that just usually seems to happen. It's just coincidental or luck. That's a better word, luck. That whenever you have a move like this, come back, it hits the 18 lows, and the 18 lows just happens to coincide with a resistance of a key point. You know the drill. Going above here, that could have a situation, because there's a whole shitload of empty space that Dash really does need to fill within this market. And given how volatile these markets can be, I wouldn't be surprised if something like that were to be the case. Finally, within Dash, I'm going to Ripple to finish it off after this. Hourly time frame. So good volatility. That's what I want to see with the market, because it's been drowsy. Oh my goodness. The opposite of volatility, good movements for quite some time. Starting to see a little bit of spark in this. And to me, it's just a matter of time before it happens, because the shit's going to hit the fan with the economy. I know it's a matter of fact. The fact that it's 2020 and it hasn't happened. I thought back in like 10 years ago that it would have been done by now. And I even stated in one of my YouTube videos like 10 years ago. Anyway. 4 hours doing all of this. After this could go. I mean, it's wild card for what it does next to a degree, because I like this period as it is with 25 minutes. But throwing that aside, it's wild card as in, because it's such a bullish setup, I think, that maybe we come down and we meet up within this and all this type of stuff. But to me, it looks like it's poised, at least on this, at least to fill some of this empty space over the next 1 to 20, 30 hours from now. And 30 hours would take a little bit. Anyway, Ripple. And within the weekly on it, I'm going to go through these time frames quickly. A lot of weakness within this 18 lows, couple of these pauses. We can see in the current week, we had a little bit of move, and it's already faltered it a little bit. This is like the banker's coin. And maybe there is going to be more downside action, and maybe there's downside action to come back up later, and this coin's down for good. But I think if crypto stay, I think it's a very poor chance that Bitcoin and many other cryptos working. Ripple doesn't. To me, it just doesn't make sense. I guess it's possible, but I really don't like the chances of much. But the daily chart is just very, very scary and interesting, to say the least, as we had this little failed breakout, not supporting this area, and even not only that, but it's not even supporting as of now. It still could, but it's looking like it's resisting this previous area of support. It most certainly hasn't even come close to even resisting, let alone supporting this key area, at least via that of the daily. And viewing it on the triple hour, here after all of this, getting above the 18 average of highs, and what a holy shit good move. Okay, well, here's your 18 average of lows correctionary phase, which happens to coincide with this. That's just luck, though. But there's like 1,117. No, there's like 31. No, 12, 13. That's close enough. Consecutive red candle downs. Maybe even 14 or 15. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 consecutive triple hours down. And since then, it hasn't done too much. But it's those typical big moves. And how this transpires, well, most likely there's a better chance that something wild will transpire over the next several days than not so much of nothing. I will, however, show the 1 minute term, which is just doing this. And I'm just going to do this because I'm saying bye-bye.